Okay. I needed to grab a couple of videos and we're streaming. We're a tiny bit late. We were up late last night trading the Australia jobs report. That was at 9:30. We started at 10 o'clock. That was 12 hours of being available to be in a trade room. That's not easy, right? Not bragging. I'm just saying it's tiring. And then to get up and have to trade at 8 in the morning is not easy. So, good morning. I feel pretty good anyway. Welcome to the 10-minute trades trade room. Thursday, unemployment claims and the Philly Fed. That's what we're looking at. My name is Lee Goldstein, the trading director at 10-minute trades. That's me. Please remember, all trades we discuss are for educational purposes. It's possible to lose money trading futures, so please trade carefully. And I just had, the reason I'm a minute late is I had to grab a couple of videos for Thursday jobless claims that for some reason, now some people trade many of the reports no matter what, and they have a big enough account to handle a loss. You know, if you have a $2,500 account, this is not a trade you'd even want to consider. Okay. Let's take a quick look. So last night, we looked at the daily market mover with the report that we put out for the Australia jobs report, and it kind of looked not that great. Did not look like a family money trade. And I said to people, you know, I agree. This particular report, it really does not look like a really good family money trade. And let me just show you briefly what the daily report looked like. You know, a daily report that's a real family money trade looks better than this. In other words, you can look at the journal and you want to see 4 out of 6 winners, 5 out of 6 winners. This had 3 out of 6 non-profit trades. It had a dull trade, it had 2 canceled trades, and it had 3 winners. So, I mean, it certainly was far from a disaster. Far from a disaster, but I was going on my personal experience in trading this report. I traded 4 contracts. Normally we used to trade 2. I adjusted the stop and I shrunk the targets. Again, experience of trading this report, and we made money on the report. Anybody that traded it with me and followed the advice that I gave on how I would recommend trading it had a very good trade. You also had a great news result, meaning the markets were expecting a good jobs report. They got a very bad jobs report, and the currency went down in a flash. And look at the reversal at the low of the day, which I failed to take, but I rarely take reversals. It's very difficult to concentrate on one trade, take another trade immediately. It is a skill that really has to be practiced constantly. But it was a phenomenal reversal. It was even bigger than the trade itself. But the reason the trade worked is because the news was extremely bad. Interestingly, the unemployment rate, which is an important element of a jobs report, was a little bit better. And sometimes that can create a mixed news result, resulting in a move in both directions, which doesn't give you a profit. It can create chaos. Now, Philly Fed has some issues. Back in March, Thursday jobless claims traded with Philly Fed. I'm thinking, I don't remember 100%, but I'm thinking possibly that Philly Fed's been late. The news has not been on time. Let's see what it looked like in March, if we can tell. This video is a little bit screwed up. Okay, so here's Philly Fed was early. Okay, so that's what it is. Philly Fed's been coming out early. So we may not trade this morning because of the issue of Philly Fed not being reliable and triggering early. So if you look, we're 15 seconds here before the news in March. 10 seconds before the news is expected, Philly Fed comes out. The news is released, and it's dramatic. Now watch the index, because the index gives you a little bit of a whipsaw. ES goes up, which makes sense because it was good news. But gold really does not have that much of a response to Philly Fed. My guess is then the jobless numbers come out and they're lousy, which should make gold go to the upside. Gold fills you to the short side, and then it reverses. And it looks like it's going to stop you out. Let's see if it does. No, it doesn't. It comes awful close. And we got out of the trade before it had the opportunity to either stop us out or be a great profit. Either way, we lost 6 ticks on that trade. Not a good move is the key. Not a good move, Philly Fed with Thursday claims. And then, sorry, that was, I hope that was March. It also traded together in January. Now, the markets in January are just too far away to have any meaning. That's the truth. January markets, too different than the markets today. All right. Now, there's a lot of Philly Fed recordings in this particular video. You have September, Philly Fed with building permits and housing starts. And you can see on this day, Philly Fed was late. Philly Fed was late. Then you had December. Philly Fed was late again. So you have jobless numbers that are being responded to. And you have the January trade that this video was made for, January 21st. Lot of news. Philly Fed, housing starts, building permits. Too much news to really give you an idea of what's going on, what's going to happen in today's Philly Fed. So you're looking to see building permits comes out on time, not much of a response immediately to the market, almost goes up and fills you, not quite. Philly Fed, very late, so we canceled the trade. I don't like to trade normally when you have multiple news reports and they're not being released concurrently. Okay, so Mark is putting me on the spot by asking me a difficult question. What's my justification for markets being different? I have been noting the volatility percentage of the market to make an educated guess how different it is. So, Mark, I mean, there's a couple of things. Number one, you can just feel if you are a regular trader, which you are, and I am, you feel the markets, right? You notice the way they behave. So one method, which is the least scientific, is you just can feel the response the markets are making to the events that we look at clearly are responding differently. But you can look just at some of the volatility, the moves that the indexes are making. You get into the trade room and gold's down $10 instead of $1. So your volatility just seems to be much higher. And also, yeah, no, I know that you need data. For me, it's the level of the moves, the size of the moves in the various indexes is so much larger in general. But more than anything, it becomes clear to us pretty quickly that gold, which was a major index that we were trading, went through a period where we couldn't barely trade it at all because it's not responding right. In other words, indexes are moving the wrong way. I hate to use the word wrong. Indexes are not moving in the expected way that we expect. So for us, volatility, liquidity, the type of moves we're getting from similar event results is not the same as it used to be. So you take a combination of all those things, and the markets are just not the same as they were before the election. So also, I think sometimes you can go back too far in your testing. Do I have data to back it up? I don't have a spreadsheet that says, hey, the ATR is wider on this particular index. I'm more going on the response that I'm seeing from the news results being so different from the way that it was on many, many reports. And the other issue, when I say the markets are different, sometimes the markets are different in that the news is being released concurrently when it used to be released separately. So in other words, you'll get Thursday claims being released with PPI when PPI used to be released by itself. So it's harder for us to test because the criteria that we would use doesn't exist. It doesn't even exist. So also, I'm not trying to beat a dead horse here by trying to prove that I'm right. The other thing, though, is we clearly see that news has been released differently. For us, it's easier than for a discretionary trader to say that the markets are different because we have really specific events that we can look at and say, hey, that's not acting the way the last 5 events acted. The last 3 have really changed. So that's really how I look at it. So let's see, we had April. Let me try and find. This is April 22nd, Thursday claims. And this was trading by itself, just the Thursday unemployment claims numbers. So, I mean, you look just even this report, Mark, I mean, last year it was responding more quickly to the numbers. It's as if the report had more meaning. The report definitely had more meaning to whoever's watching it, to the traders that are watching it, market makers, people that, manipulate the markets, big robots, trades that are being placed before the news is out. Just not getting quite those big moves that we're looking for. I thought that I had last week's Thursday claims. Okay, let's see if this is last week or the week before. Okay, this is 2 weeks ago. Now, sometimes these videos that are created by our software get corrupt, and I can't show what I want to show. So let's see. This was May 13th. Looks like it's working. So it was core PPI with Thursday claims, keeping in mind that we used to trade PPI by itself. Okay, so here's the trade, May 13th. This is 2 weeks ago. Now, if you're watching us on YouTube, why not like our stream, subscribe to the channel. So the jobless numbers and the PPI both are good news. Gold responds and hits target 1 and struggles to follow through, and eventually it does. It almost does. It almost does. You could see it drops and then goes back up. Now the NQ has an interesting move. Now I've tried testing the NQ on this report and I have not had good success with it. Now you have a huge gold trend this morning. It's really my recommendation to let this trade go this morning. Yes, it could work. This is last week's. Yes, it could work, but I just feel the risk is greater than the reward. You're potentially giving up a couple of $100 to make less than 200. Let's just see what it did last week. Last week, I think it made a little bit of money. Let me fix my recording. I want to record this. This was last week's. It was trading with non-farm productivity, which is a small report. And no response, not much of a response. Just not much of a response. I just don't feel that this report has been steady enough to put real money on it. I mean, that's really what we're dealing with. If this, and you have such a large trend, the market's probably going to struggle a little bit to overcome that large gold downward trend. Now, the one thing I would say is I think the news is going to be good. Good news would push gold down, right? Good news normally pushes gold down. So do you want to chance a trend trade on this news? In other words, where you're just trading a burst to the downside, or the other problem is you could wind up getting a reversal because the market has been going down since we got here. But I think that the risk this morning is, and the behavior of this report is so inconsistent. I just don't see, I would not, number one, I would not use a target of 8. It's too big. I'd use a target tops of 6. And what I would do is leave that second target at 15. You know, you got a stop of 12. So is this worth risking $240 on? I don't think it is this morning. You have an 8, 29.59. You have a great chance that one of the reports isn't even going to release on time, because all year long it hasn't been on time. Entry time is 8/29/59. You just have so many factors that say this is a report that you can't rely on. So if it's acting like a report that currently can't be relied on, don't trade real money on it. You don't have to. You know, you got Australia jobs. You've got other reports that you want to take a risk on because they've been making you money. This report, for me and for us, has been struggling to make us money. Okay? We've made very little money compared to the risk that the report presents. So I never mind passing on a trade. If I made one, every week I like to go over the decisions I've made and try to pick, the bracket is 6, Ed. Bracket is 6. Every week I like to go over the decisions I've made and pull out what I think is the stupidest decision or the worst decision that I've made. And this week, the worst decision I made was this decision not to trade oil. Oil had 2 cancellations in a row. That was like the market saying, this is going to be a good oil trade. It's going to be a good oil trade. So as you know, just looking at decisions I made, that's one decision. I don't like the decision I made. I should have traded oil on that one. Will I ever look back at this particular trade and say, wow, I should have traded this trade? No. Time.is, go to the website time.is to make sure your computer's in sync. Yeah, you still got Friday. Friday, we don't really have any family money trades. Today we have one more family money trade, natural gas. And that's a scary one. Natural gas is always a little bit scary. It's nobody's fault, but it is. So I'm making the choice. You've got a very big gold trend this morning. You've got Philly Fed, a report that doesn't release reliably, and you have Thursday jobless claims, a market that has not been responding as well to these claims. Yeah, I always regret crude, Mark. I always regret crude because I like trading it. I like trading it. But it really has not been trading it well. It hasn't been trading well. It's been trading poorly, very poorly. That was the first good crude trade in 6 weeks. It's even longer. That was just looking at one mini journal. It's probably 12 weeks that crude hasn't been trading well. So, yeah, I torture myself over it, but I shouldn't, because it really has not been behaving. This particular report, when I don't trade it, I say, wow, I should have traded it. And when I do trade it, it's really difficult to trade. It's one of those crazy reports that has been filled with difficulty. My gut feeling is this morning, the news is going to come out and it's just going to go down and it's going to be a perfect trade. That's my gut feeling. That the jobless, but you know, with the jobs, I don't think anyone knows what the jobless numbers are going to be. Are they going to be good or bad? The jobs numbers are very confused. Very confused. Now, I'm not a person that believes people like sitting on the couch and not working. I think that's a fallacy made up by politicians. Rich politicians who have all their health care paid for, never have to worry about a thing, saying because they're ignorant. I think most people want to work. Most people like doing something. They don't want to sit around and do nothing. It's not human nature. So this report has just a little bit too much risk for me. I mean, that's really what we're dealing with. It's got a little bit too much risk. I think there's, of course, a possibility. There's always a possibility a report that you don't take can work perfectly. There's always that possibility. It's a bracket of 6. It's an entry time of 59. Shrunk the targets a little to 6 and 12. The first target, in theory, is supposed to be 8. The cancel time is 10 seconds. We know cancel times are extremely problematic in these markets because news is responding late, right? Larry, if you send me an email, help@10minutetrades.com, the number 10, help@10minutetrades.com. Look at gold now too, acting very difficult to trade before a report. I'll send you the clock, Larry. Help@10minutetrades.com. So I hope you got that, Larry. I hope you got that info. Chantal, I don't know if you're here. If you can type in on YouTube, help@10minutetrades.com for him, if you can hear me. Yep, you got a big downward trend in gold. NQ is kind of flat. Let's see, do the numbers come out? Philly Fed's early, very negative. Very negative, should make gold go down. It's not, okay? Gold's just chopping around as if the news didn't come out. Now the jobless numbers come out and they're mixed, they're positive. Gold should go down, it goes up. I made the right decision this morning. This would have been a loss. Now the market is responding to the jobless numbers, not to Philly Fed at all, but gold, you know, what's gold doing? It looks like it's just having a reversal, and now the NQ really just gave you a whipsaw candle. It would have been a stop. We can look at the video. I made the right decision this morning. I would have rather that it worked for anybody that traded this live. Okay, I'd rather the report worked, but my gut feeling was there was just too much risk, too much of a trend this morning, too much danger of weird movement, and that's what we got. Okay, we got movement that doesn't quite really fit. If you have time to analyze the news, You don't have time to really trade the trade. The major jobless numbers were 6,000 better than expected. That's not even that big, but they were also better than the week before. Less people filed claims, but Philly Fed manufacturing was very negative, very negative. Normally gold would go up, it didn't respond. And then gold went up on positive jobless numbers. The NQ I would expect to ultimately go up on positive jobless numbers, and now it is. The NQ's up a lot from when the news first came out. The NQ was 8 ticks, now it's 52. That's a lot of ticks. That's 10 points, almost 40. Yeah, it's 40 points, 40 ticks. So our setup, just not the right way to trade this particular report. You could trade it discretionally. Okay, he said he was able to send the email, Chantal. Let's take a quick look at the video. Mixed results, exactly, Mark, creates chaos. And you do have mixed results. Continuing claims were worse than the initial claims, but the initial claims are much more important. But it's considered mixed news because the main jobless number was positive, the main Philly Fed number was negative, but there was no market response initially to Philly Fed. But this is all the reasons why I felt that I didn't want to put real money on this event, because this event is inconsistent all too often. That's all. It's too inconsistent. If it wasn't, I'm not afraid to trade. I don't mind trading. I like trading. I like quick trades, but I like trading. Let's look at the video and see exactly what happened real quick. And then we'll be back at 10 o'clock. Exactly, Mark. You might have had a long... Well, what direction would you have gone, Mark? Would you have gotten in if both news was positive? I mean, you would have gotten killed. You would have gotten killed. No, don't you? If both were positive, well, if you would have gotten into the NQ, I think I saw you say you were trading the NQ more lately. But gold, look, you might have gotten, let's look at the video. Let's look at the video. So here's the video. Watch Philly Fed come out 15 seconds early, and there's no result or no impact on the gold price. All right, Philly Fed's out now 17 seconds early, and gold, it goes up a couple of ticks, which would have been the right direction, but no follow through. It just chops around. The jobless numbers come out. It jolts down, which tells me our bracket is too small. I think we should have an 8 bracket on this report if we're going to trade it. And I'll note that. An 8 bracket, and you have an awesome winning trade. So that's what testing allows us to see on some of these reports. But with our 6 bracket setup, you have a stop out. With a 8 bracket, you have a trade that is going to keep you safe. Okay. Any questions, folks? We, study the event for us. If you're watching on YouTube, give us a like. All right. Sign up for the channel so you know the next time we'll be here streaming. We stream a minimum of 4 times a week. 4 times a week. We stream a minimum amount of times. Okay. Live. Sometimes we trade live. Sometimes we don't. Hang on a second, Mark. Let me look at your question and we can talk about why I think I'm right. I I just had to notate something and I can't remember what it was. All right, Mark, you're saying doesn't make sense though if you increased your bracket and have a winning trade. Oh, which news are you trading to? So here's the thing. I totally agree with you. Sometimes all you can do when you have an inconsistent report, try to keep yourself safe so that if there is a consistent move, you can take advantage of it. You're not really trading to any news except the job. You'd really be trading to the jobless numbers, which is what the market, no, because that should drive gold down. You're not trading to any news today. A bracket of 8 just would have kept you safe. That's all I'm notating. So what you want to do, so you notate that this week a bracket of 8 would have kept you safe. Then what you have to do is go back and test. You have to test other events to see if a bracket of 8 would have kept you safe. That's all you can do on an inconsistent report, is check the bracket size. Okay, that's all. But that's why this report is inconsistent, because it's not responding in a reliable way to the news results. That's the exact definition of inconsistent. Your best bet is to sit it out until it starts acting reliable. I mean, that's really the truth. That's your best bet. Let it behave reliably. Because we don't trade discretionary. That's not our system. That's not our method, right? So all I'm commenting on is what might have worked today, and then I notate it, and then I'll go back and look at other reports. Brian, FOMC hit the first target and reversed so fast that we had a tiny loss, like $45, and Australia employment was an excellent trade. Should have traded eight contracts instead of 4 on Australian jobs. Australian jobs was a good trade. And that's been working, Brian. That report, even though the DMM isn't that great, Australia jobs was good. FOMC on the NQ, which there was a new setup on the report, did not give us a profit. It hit the first target of 7 ticks, which I chose to shrink, and then it reversed and stopped me out. I couldn't get out fast enough. So it was a tiny loser, but Australia jobs was great. Was a good, solid winner. But this report, completely inconsistent. Let's take a look at natural gas. I think we have a natural gas volume issue this morning. So natural gas, looking at the volume, so natural gas what I want to know is what's the volume on natural gas 6? What's the volume on natural gas 7? What's their daily volumes? Which one is rolling over, if any? So we've got mixed volume on natural gas. We can trade 7 today without a problem. It'll probably be a higher volume by the time the natural gas report rolls around. It's 5 days till rollover, so if you use AMP, they might not let you trade natural gas this morning, okay? With the contract 621, they might force you into 7. So natural gas, the reason I was checking this is I wanted to set up my charts. And then let's look at one other thing since we're here. natural gas, 621. Canada had some reports this morning that haven't been moving the market, but they move other markets sometimes. They've tried to make these new reports move the Canadian markets or have an event, and nobody cares about these Canadian events. Let me show you what I'm talking about. So if you look at investing.com this morning, at 8:30, there were these Canadian reports. ADP, okay? But no impact, no impact. And it was a really bad number, okay? So you'd think you should have a pretty negative move in Canada's currency. And really no effect from the ADP report. You know, a little bit of upward movement. They just can't get that ADP report to have any meaning for the Canadian currency, no matter how hard they try. All right, folks. Chantal, you can say goodbye. Thank you, YouTube folks. So give us a like and sign up for the channel. We'll see you tomorrow. And everybody in the trade room, I'll see you at 10 o'clock for natural gas. That's our last trade room of the day. Natural gas storage report. Okay, folks? So I'll see everybody later.